Well, welcome everybody to the next panel, which is on CBDC and in particular from fiat to digital, the evolution of money. I'm very happy to moderate this session. My name is Katrina Luchsinger. I'm a lawyer from Zurich, active in the financial market regulation. I have a great panel here. I'm happy to introduce Mr. Robert Holzmann. He's governor of the Austrian National Bank, ÖNB, and in that function also represents Austria in the European Central Bank. He's a former director of the World Bank and a professor of economics with many, many publications on many different topics. We furthermore have André Portillo. Is that correct?
Yes.
Portillo, is that fine? He's head of digital assets with Latin America's largest investment bank, BTG Pactual. BTG Pactual launched a US dollar-pegged stablecoin back in March last year with a very big publicity. Last but definitely not least, we have Ronit Ghose. He's managing director and global head of future of finance at the Global Bank Research at Citi. This is Citi's think tank for the future of not only technology, but of money per se. Ronit also acts as advisor to various governments, universities, VC investors in the United Kingdom, in UAE and Africa. I'd like to kick off with the first question, which does not relate to fiat, but I'd like to have you as bankers, and in particular, Robert, you as a central banker, tell me, what do you think about cryptocurrencies?
Okay, thanks first of all for the invitation here. Great to be here, great panel, and that was also interesting to listen what happened before, because I saw so much enthusiasm on cryptocurrencies that I think my task is to limit it a little bit.
We wouldn't have expected otherwise.
You are a central banker, right?
Exactly. Because cryptocurrencies are no currencies and are not even money. Currency in the sense is that they represent the money of a country, and money which consists typical by definition, what we all know who studied economics, it has to be a unit of account. It has to something to bait. It has to something which you can store money in it. And cryptocurrencies has, if you want so, one element which is a store of wealth. And it's not, a wealth which represents a market value beyond or within physical dimension. It's an invented wealth, which is nothing new. We have it in the past, and the famous one, which you all know, is this famous millstones in Southeast Sea, where you have this millstone, you define it with some value and then exchange it. It's fine, you know. So the question then is, what is the value then? What could be the value of a cryptocurrency? Well, if it has elements which make it a wealth which is asymmetrically correlated with other wealths, it would create value added, because with regard to diversification, it would add it there. But for me, the way it is created is a bit quirky, because everybody can create crypto money, you know. It's in the sense physically, you know. Yeah. Out of it, those who win are the ones who have the best publicity in order to say, this is important, so we will make money with it. And some succeed, few, others don't. And those who succeed, then at the beginning I would have loved to invest in Bitcoin. They've done it when it costed a few cents and moved out later on again. But what it is, for me, it has all the features of something which we know, which is a pyramid game. You come in early on, those who move out early make a lot of money, and the rest not. But with having all said that, I think it's something which needs to be taken seriously in order to be used as wisely as possible. And we heard before a lot of regulatory part of it. But this, how to say, is different when we come back to that, is the use of digital money. This is something which has
Totally different.
nothing to do with
Correct.
crypto, which is, how to say, one sideshow, but digital money is important, and we'll talk about it, but here I stop. Thank you.
Well, Ronit, would you say that crypto, nonetheless, we've heard the critical side,
Sure.
is part of the evolution of money which we're seeing now? That maybe without that you wouldn't have had this evolution.
Sure. Maybe, I mean, obviously, the governor knows monetary history better than me and monetary theory better than me, but it's worth reflecting on history. The idea of a centralized money like we have today, the euro or the franc or the dollar, is a very, very modern idea. Just like a centralized state is a very modern idea. So if we take the history of civilization, I'm telling you what you know, but 5,000 years odd, if we date it from Mesopotamia, the Babylonian times, for most of those 5,000 years, there was no centralized state, there was no centralized money. In fact, banknotes, which we, at least before we all went digital in the last 20 years, when we were younger, we all had banknotes, right? And we understand banknotes as like a core function of money, or coins. Where did banknotes come from? They didn't come from central banks. Central banks issuing banknotes is a relatively modern phenomenon. Banknotes come, like most things, out of China, 600 to 800 AD. I was in Hong Kong on Friday morning, and I was in the HSBC, sorry, plug for another bank. They have a wonderful archive, and I was in their archives looking at these strings of bronze coins, which was the currency of trade on the Silk Road and in other commercial routes in China. These strings of coins. Now, you couldn't, as a merchant, wander around up and down the Great Silk Road or whatever with strings and strings of coins because they were heavy. So what you would do is you'd go and deposit them in merchants, and the merchant would issue a note. These are big notes, like almost A3 size notes. And at some point, and they would stamp it saying, there's a lot of bronze coins in my shop. This note, it's like a depository receipt. And at some point, one of the Chinese rulers were like, hey, this is a pretty cool invention. I want to regulate it and control it. And it was another 400 to 600 years before we had fiat currency emerge. Now, of course, the governor knows what fiat is, but for the audience, for the avoidance of doubt, fiat currency is money with no backing. There's no bronze coin or gold coin, or for most of history in Europe, all the Americas and the Pacific trade was silver coins. There's no silver. It's just a pure expression of power. Comes in the late 1200s. How does it come around? One of the great Khans was, I want to invade Japan. So he's like the CEO. He goes to his CFO, says, I want to invade Japan. And they go, no money, boss. He goes, who needs money? Let's just print some notes. It'll have my seal on. I am the great Khan. You don't accept my note, I will kill you. That is fiat. Okay, that's a very dramatic form. The governor doesn't go around threatening to kill people now, obviously, but it's law. We impose that with law and culture. But that's where money, and then it disappeared. Fiat only came back relatively recently, and in fact, in the last 50 years when we came with the gold. So why this big history preamble, and why am I boring you all? Because money has always existed in many colors, many shapes. And my last point before I hand over the mic, I don't think cryptocurrencies or blockchain-based money will replace fiat, nor do I think they're mutually exclusive. I just took a little train coming up the Alps, right? And then I had an intercity train to get here from Zurich. And then at about 2 a.m. in the morning, I got on a Swiss Air flight from Dubai, where I'm based. I took a plane, I took a car, I took an Uber to the airport. I've done like 3 or 4 different modes of transport. And if you live in Europe, you'll be doing that daily. You'll have 2 or 3. You have roads, you have trams, you have trains. And I just think of money that way. We move money using the fiat system, using the central bank-based interbank clearing system. And we might be able to use the blockchain-based system as another way of moving money. And cryptocurrencies, absolutely agree. There's a lot of, Ponzi pyramid schemes in there, but the underlying technology we believe has value as another rail, not the only rail. Sunday morning, I was sitting with my crypto friends, like, Rona, your banking system is going to be replaced by the time you retire. It's all going to be crypto. I don't believe that. Now, I've already probably lost half my crypto friends who listen to this on YouTube, but I just think it's another rail, and that's where I see it has a value and a purpose.
So, Ronit, you gave me the word to hand over to Andre, which is technology. Has the fact that we've now dealt with cryptocurrencies and have been using the technology on our handies, on our mobiles, is that going to be supportive for the future of the evolution of money?
Well, first of all, nice to be here. Thanks for inviting me. It's a pleasure to be with you guys. Having this lesson. I'm not an economist, so I am a trader by all my career. So I try to look to financial history to find some clues. And I totally agree with almost everything that you guys said. And when you talk about technology, money, it's a way of communicating value, right? At the end, that's what it is. And it evolves with the technology, okay? That's why we're seeing right now, we are talking about digital money, okay? So that's something that it's already happened, okay? And I totally agree when you say that we probably won't have just one rail. I don't know which rail will prevail, probably the best one, the one that, I'm not sure how regulation will play a role as well, okay? But at the end of the day, I think our main job is to look to these new technologies, understanding, and totally agreed, value at the end of the day, the market gives a value, okay? Sometimes we have like Ponzi-like things, but we can say the same thing on other asset classes as well, right? So, but at the end of the day, we need to understand which ways the technology is moving, what is worth it and what is not worth it, and we can be talking about the whole day about what is worth and why Bitcoin right now worth like $42,000 and not 10 and not 100. Okay, but at the day there is a new technology, and it's funny because the technology was invented to create a new money, right? And at the end of the day, probably the biggest evolution. I don't know my Bitcoin maximalists don't like when I say that, but probably the biggest evolution is the technology that was invented to be able to have this new sort of money, okay? And I think this thing will evolve, will change a lot of things in the financial industry, okay? Probably not that fast because, not only because of regulation, but because for this thing to be incorporated in our system, there's a whole lot of like legacy technologies that need to be sorted out, and that's a way difficult thing. I mean, talk a lot to my guys at Citi, we have BTG. It's very difficult to incorporate a new technology through all your systems in making sure that, well, when a client sends money, the money will arrive where it needs to arrive, okay? There's no such thing as like in technology, in banking, like move fast and break things, on the opposite, right? So we cannot break things. So sometimes we do, but we try not. But at the end of the day, I mean, this technology is to stay, will advance, and will change a lot in the ways that we do things. We can go deeper afterwards.
So the European Central Bank back in November announced that they were entering into a preparation phase for launching the digital euro. Why, given also the problems which Andre alluded to for the banks to provide such a change in the technology, where do you see the game changer, and why is that something which is being put forward?
At the moment, the only central banker money what individuals have, not the firms, but individuals, is cash. And what we all know, digitalization reduces cash. And their cash and central bank money is an important part of our policy instruments. And so we don't want it to disappear, and particularly that we cannot regulate it anymore, that we cannot control it anymore, because a lot of things which I agree have been noted here, but one of the tasks of central bank is not only price stability, it's also financial market stability. Mm-hmm. And for this financial market stability, we need to have some kind of instruments to do it. And the question then is, if and as we move digital, what is the money we can put on the table? We cannot simply nominate some stablecoins as our money. We need to produce it ourselves with all the aspects which cash has, and hopefully coming close as possible. So it has to have the anonymity there. It has the possibility there to the prices, how to say, it's used as cash only in digital form. And this is the reason why we started out already 2 years ago with an investigation phase. Essentially, how can we define the project? After 2 years, we came up with a product which is promising, but from which I claim one can perhaps improve it. Last year, I had a chance to talk to colleagues in Japan and China. And for example, the Chinese digital currency is much more what is ambitious than what the European is. So I think there's still room left there. And so we move in this direction. But on this one, we want to bring, and that's an important part, is the main players on which our monetary system is built along. It's not something we want to go in, now we want to dominate the market, want to bring it along, but in a way in which we can control financial stability, which is a major part. And my biggest, remark I found out when we talked to the Chinese is, when they said why they want to have the digital currency, besides anything out there, is to say, at the moment, our banking system plays no role in the payment system. All the payment system is done by Alipay, and we all know that out of it. And of course, there are some other thoughts behind it. We all understand what it is. But they want to, as they claim it, provide the rails on which the payment system works. And this is also the way how we see it. We want to have a payment system which assures the stability, which we can control from the monetary point of view, but which allows then the private sector to build on it and come in with all the things there, programmable and other parts of it, which we won't do, but which this CBDC can do. And this will be hopefully the right we will do over the next 2 years, when we start to become technically a bit more precise in order to, what is the role of the private sector to do it, to come in there, how to use it. So it's not, we want to keep the payment system in order to make money. That's not our job. We need it for monetary reasons. We need a vivid and very engaged financial sector, and it was great to hear all the innovations which are planned. But we have to have for financial stability because, and this goes a little bit back, and if you allow me 1 minute, central banks were created at the end of the War of the 30 Years, where a lot of Central Europe was, so to say, destroyed. And then the Swedish, business community said, we finally want to have a stable money, and that's the reason why we do it. It was a private creation, it was not a public creation. But out of this,
most of them were.
Exactly, out of it, and you were right with the banking system. But the reason why the Fed was created, finding out, private banknotes are not, perhaps the best way in order to deal with a payment system there. That's the reason why we came in. So our point is, if you can do the job, fine. But we need to be there in order to create price stability and financial market stability. This is our job. The rest is up to you, but we need to get involved. So to make it simple.
So you say you want to include the private sector. talking to different bankers and different private bankers, and being a Swiss myself, and therefore also being exposed to the Swiss banking system, there's a big uncertainty as to how far the private sector should be included in such a blockchain. The Swiss
blockchain has nothing to do with blockchain. Just to say it may be part of it, but it needs to be part of it. There can be other forms there how it is done. There's nothing to do with blockchain. Sorry, perhaps also blockchain is a crucial, and it's a great instrument, how to say, mind-boggling how it was done, and it will play a big role in payment system. In my view, for the time being, more in wholesale than in retail. So this is definitely there. So the tokenization is something which will change the world of finance. Fully agree to that. Whether it is on the small scale, daily one, I have my doubts. It can be done through stablecoins and other parts of it. It makes it more complicated. So
your idea also would be, and I think that's very important, it would be a wholesale system which would be in place.
Definitely, we're working
banks.
on it. How to say, Banque de France, Banque d'Italia, Bundesbank are working on wholesale. It will be added to that. I mean, it makes a lot of sense, how to say, all the collaterals. It's anachronistic why it's done. This can all be done, and sending big amounts of money there. So all this will happen, and for this it won't happen only between us. But of course, the banks are, how to say, if you're looking at the moment, they have an interesting system by which they make the money by delays of payment when they receive it and when they pass it on there. They want to keep this money, understand that, but how to say, they have to be part of it. We cannot say simply because of that, how to say, you remain the monopolist there. There must be others who come to the table, and the banks can compete with it. Of course, this is what they don't like. We're very much open to competition.
But it does mean that the banks will be an interface between wholesale and retail. And I think that goes back to what does that mean for the banks when that is implemented?
Can I just broaden out the conversation?
Please,
because I think we're focusing in on, as you said, in China, it was very much the CBDC or the PBOC pilot, and then the production was about, hey, we didn't plan to have a duopoly at point-of-sale payments 10 years ago. It emerged. It came out of e-commerce. Alipay came out of e-commerce to solve a trust problem for online payments, just like PayPal did. And then it suddenly, if you've been to China in the last 5, 7, 8 years, you realize that your non-Chinese issued payment credential is no good. You need an Alipay. So China is trying to have a public sector alternative to payments. I think what's really interesting here from a European perspective is, if I can be, just brutally direct, 20 years ago, when I was a young financial analyst in London, the European financial system and the major parts of it, I'm not going to mention their names, but the French and the German and the other banks were huge global players. They were competitive. They were innovative. They were building. In a global context, many of these Eurozone players are really, from a value perspective, small, not balance sheet. That's assets and liabilities. So their liabilities are also big, but from an equity perspective and a profit perspective, for a variety of reasons, that maybe as society, Europe has decided, the Eurozone, the policymakers have decided there's only a certain amount of money you should make, which is fine. But there is a point about having a competitive financial system, which isn't just about making money, but it goes back to stability. Because long term, if you want to have a stable, which hopefully all policymakers, us as finance people, as the community agree, and if you want a sustainable, stable financial system, it needs to be competitive. Now, right now, when you look at it globally, the large American banks and payment companies are huge. They have hundreds of billions of dollars of value. The Asian, Chinese, Indian, Southeast Asian companies are also very big in size. And Europe's got a strategic problem here. And where I see wholesale CBDCs playing a potentially really interesting role in competitiveness is the euro. If you think back to 20 years ago, when the euro briefly challenged the dollar as a global currency. It still is a very important global currency. If you look at cross-border payments and settlements, we've sort of slightly lost the kind of steam in terms of, no one talks about the dollar being replaced by the euro anymore. They say RMB. China is a massive economy and a hugely significant part of the global financial, economic, and political system. But the RMB payments are small and will remain small because of policy decisions made by the Chinese leadership. There is a really interesting opportunity in the next 10 years for the euro maybe to become a bit more relevant again. And so if you actually have a competitiveness, now the retail CBDC can be like the Chinese one, it's not blockchain based, but a wholesale, maybe blockchain based, could be permissioned, so it's not completely public blockchain. But having an instrument that actually the US won't have for a while gives you a competitive advantage. And it's like, go back to my transport analogy. Europe has great trains. For me, blockchain's like trains, except you can export this stuff now. People want stable currencies. People don't necessarily want cryptocurrencies or meme coins beyond in playing games. The hunger for stable coins isn't a hunger for blockchain technology per se. It's a hunger for a stable asset, i.e. the US dollar. The other one that's globally free to use is the euro. You're sitting on a gold mine as the ECB system. Go out and use it. That's not Citi advice. That's me just speaking as an analyst. Just to be clear, that's not Citibank advice. This is a massive competitive opportunity. Reboot, Euro 2.0. That wasn't a Citi comment, but that was a personal analyst comment.
So I think you have focused on the necessity for sort of some kind of US dollar stability. You have the stablecoin of BTG. Where do you see the emerging markets in this digitalization process, in this CBDC process?
CBDCs is funny because there's sort of like a FOMO going on in central banks right now, I guess, right? Because every other central bank has some type of study regarding CBDCs. It's funny because in Latin America, and specifically in Brazil, we have a very advanced CBDC project, okay? We still have a name right now, which Drex is the name of this new infrastructure. But the central bank in Brazil chose not to change the way that the system works, so they went to a wholesale way. So the CBDC in Brazil will, at least for everything that we heard right now, will be just for the wholesale, and it will be interchangeable with tokenized deposits, okay? But when we look to a much, I would say, broader perspective, and when we talk about tokenization, okay, for me, that's a very important part of it, is that what this technology can bring a part of, well, if it is money or if it's not money. For me, money is a demand phenomenon, right? Apart from, let's say, the official money. But when we talk about tokenization, then we're talking about technology. We're basically talking about programmability, okay? And if these tokenized world that people talk to so much, it's really good and it's really will change financial industry. It needs to have stable currencies working on the same rails that the tokenization products will run, right? And for that, and it's funny because the market doesn't want Bitcoin to do tokenization. That's why the stablecoin, USD stablecoin is so big, okay? Because the market is already telling us, okay, we need USD, we need euro, maybe, but we need this money, this stable money, running on the same technology that we want to do tokenization, we want to do DeFi, we want to do whatever people are coming with. And so I think that this new world is that, well, part of the money will go on chain. Probably we won't have just like CBDCs. CBDCs will vary a lot depending on country to country, regulation to regulation. It will not be just CBDCs. Will be probably a mix of, like, I call them cousins, okay? So we'll probably a mix of CBDCs, stable coins, tokenized deposits, and this will change from country to country, depending on regulation, depending on the chosen technology, and we're just scratching the surface. Okay, but again, just if we take, and again, in Brazil, for instance, we don't have like a payment problem. Okay, we have instantaneous 24/7 payments in Brazil, so that thing is solved. Check it. But even if you think just on the wholesale part, the amount of money and value that you can unlock just making the settlement processes more efficient with tokenization, with programmability, and having, let's say, your official currency running on the same rails that these products run. I mean, it's probably way more for most of the countries than the gains and efficiency that we're going to have in terms of payment. Okay, I'm not talking, let's say, because there's a lot of countries that, well, payment is not solved yet. That is a different question, okay? But I'm talking about like US, Brazil, Europe, China. So, and sometimes I think people still a little bit like with a narrow view on the CBDCs and how this thing will play out.
Okay, thank you for that. So I think we're nearly over in the time. I'd like one last question. What does our discussion on digitization of money mean for the man on the street? How will they notice what you're doing in the background on the wholesale?
Can I take this first? They notice, at the end of the day, they don't notice. The instantaneous payment in Brazil was amazing because the adoption was so huge. And when you look back, why the adoption was so huge, it's just because people came out with something that works. And people didn't need to understand, okay, with this runs in blockchain and whatever. I mean, it's easy and it works, okay? That's what people need to have in mind, in our opinion.
Mm-hmm.
No, I fully agree to that. At the end of the day, they should use it like cash or other parts of it, and it should be used. I think an important part, and coming back again to the role of central bank, is why Europe, you made a good point, needs to be in the forefront has more to do with strategic autonomy. And the example also that we don't have to be the first one, we cannot be the second one. The reason is if and as, let's say, the digital one would emerge as a great digital currency which could be used also in Europe, you simply link it to your account and then you could use this account everywhere in the world. Then we would have a kind of yuanization of the world, like a dollarization, which of course no, just it was an assumption. Yeah. But what it means, then we would lose our monetary autonomy. So we have to be there in order to fend this off. So this is another way how we see it, but at the level of application, we work with everything that works. So there's no prescript in order to say work. And I have to say congrats to Brazil. They're outstanding in this area, really. Roberto and all his team are part of it. It's really fantastic.
Absolutely no one cares about how the money works. It's a bit like no one cares where our emails are stored. We're just sending information, whether it's sitting in an AWS or a Google or a Huawei, literally no one cares. They just want the information to go, they want the payment to go, they want the loan to happen, most of people. And it's not going to be the man on the street necessarily when it comes to digital assets. It's going to be the kid or the grown-up, overgrown kid behind the keyboard. So my youngest boy, I have 3, is 9, about to turn 10. If you have a 9-year-old, 10-year-old, 11, if you got any like a Gen Alpha kid, what do? For them, digital assets are more valuable than physical assets, right? We're all tourists of the digital world. I was really old when the iPhone arrived, right? My BlackBerry had to be like physically prized from my hand as a banker. Like,
your problem on Robux or V-Bucks, right?
Yeah, and then my BlackBerry got driven over by a taxi in Sweden and died. And I was like, okay, it's dead now. I can't use it. But my 9-year-old, 10-year-old, one of his friends just went back from Dubai, went home. The family went back to Korea. They play all the time online. I have another colleague in Bahrain. I was at the central bank, and he was the banker was saying to me, my nephew is playing with his cousin in Qatar between Bahrain. He wants to move money now. He can't go through the interbank correspondence system. He can't use Visa, MasterCard. It has to go now. because the future, like, goes back to the what's this, what's the marketplace of the future. So a lot of the digital, quote unquote, digital payment players, so Alipay, Klarna in this time zone, PayPal, the OGs of fintech, came out of e-commerce. I'm sitting at home shopping. Now I'm sitting at home shopping in cyberspace. I'm sitting at home or walking down, in Davos in my virtual reality glasses, ordering something. Just like I order things from the back of my Uber in a taxi, when I'm going around Dubai. How does a payment work when I'm doing that in a virtual reality world or a game? A token is the best way to do it. So it goes back to what I said about trains. Trains did not replace cars. The autobahns got made better. The highways got made better. They're much better in the 1950s than they were in the 1850s. The Fiat system will get better. It's getting better all the time. There'll be another rail, and that rail will have value. And maybe it'll be a CBDC. Maybe it'll be a bank-issued token. Maybe it'll be... And those tokens will be used in this new world, more than replacing the existing world, because disruption rarely happens of the existing world. Disruption comes along the side. You create a new... And then the side pocket becomes like the thing.
It's a great last word, because I've been told that time's up. We started off with a deep dive into history, and we've ended with a great view ahead. I'd like to thank you all for your participation, for your insights, and I wish you a lovely time here in Davos, and happy to meet up with all of you. I'm sure you'll stay around and take one or two questions if there are questions afterwards.